Hi, my name is Abdel Misa and thank you for watching. Just like many of you, I'm staying home with the family, observing social distancing, and so I hope first that all of you guys are safe and healthy. I have received like tons of questions from my students and colleagues about what in the world is happening in the oil market. It has gone crazy recently. Is this a great time to invest in the oil market? So I thought I'd put together this video with my own analysis and then share it with you. So with that, let's get going to work. So before we get started, I would really appreciate if you can subscribe to the channel. You know what to do, just hit that subscribe button. So oil has been down almost a whopping 70% since the beginning of the year. We are talking about oil prices at $22. That's like insanely low relative to recent history. So what's going on? It's really about supply and demand. So let's first address the demand equation. We are dealing with a major economic crisis around the world. We're talking like a global recession due to the coronavirus crisis. As the economy goes down, oil demand goes down, and that's of course not good for oil prices. So think about it this way. Okay, what happens to airlines? Okay, so the demand in airlines has gone down with the coronavirus. Airlines is a major user of oil. Well, demand goes down, oil prices go down. Think about factories. Think about driving. Everybody's staying at home, so no driving. So basically, we are dealing with a major disruption in demand for oil, and that has led to lower oil prices. But let's now look at the supply equation. We're dealing with a major geopolitical drama. So guess who is the biggest supplier of oil worldwide now? Okay, most people will think, okay, Saudi Arabia, Russia. Well, it's us, the US, and it's due to the shale boom. And here is where the drama started. Saudi Arabia is doing an IPO for their biggest energy company, Saudi Aramco. So they have done the IPO in Saudi Arabia and then want to do the IPO worldwide. And so it's their interest to get oil prices going up. Now, the coronavirus was an unexpected crisis. And because of that, demand went lower. Now, if you want to push prices higher, the only way you can do it is to cut supply. Now, Saudi Arabia is, of course, the biggest member and the most influential member of OPEC. And OPEC had a partnership with Russia. Okay, so Russia is also like one of the biggest producers in the world. And this partnership was called OPEC Plus. And based on this partnership, Saudis wanted to cut oil production. And the Russians were not keen on doing that. Why? Because they thought, well, look, like, why should we cut production and then benefit the US and all the shale producers, because it will lead to higher prices and then without the US cutting any production. So the Russians said, no, we're not on the same page here, we're not going to cut production. Saudis like, what? You don't want to cut production? Guess what we're going to do? Well, we're going to flood the market. We actually are going to increase production to 12 million barrels a day. That was a huge surprise in the market. Not only we're going to increase production to 12 million barrels a day, we're actually going to reduce pricing for all our key customers. And that's when basically the double whammy happened for oil market. So think about it, that's the worst that can happen. You're dealing with the major blow to demand, and you're also dealing with a major supply shock, because in this case, you're actually increasing supply versus lowering supply. That's insane, right? And that's how you get to an oil price around $22. So what's the latest on this drama? So President Trump has tried to intervene and then to broker a deal between the Russians and the Saudis. There is a meeting, OPEC plus meeting that started yesterday and then hopefully finishing today with the idea to cut supply by 10 million barrels. We do need a supply cut, so we'll see. So we'll see what the outcome of the meeting is. There's also like a G20 energy minister meetings today. So there's a lot of action, and yeah, sure, like we have got to cut supply to balance the oil market. Let's now switch gears and speak about how you can potentially invest in oil. Professionals usually use the futures market. If you look at the current contract for oil, it's trading at $22.76. As we have mentioned earlier, we have had a sell-off of almost 70% since the beginning of the year. It's also like we haven't seen these prices since 2001. Now, for retail investors, it's a different story. One of the most popular investment for oil is through an ETF called USO. So with USO, it's highly correlated to the oil market. So that's the good news. And it also trades just like a regular ETF or a stock. So that's the other good news. However, most people make this important mistake. With oil being at around $22, investors think that, okay, if oil goes to $44 and I invest in USO, that means I can double my money. Well, that's not necessarily true. And here is why. ETFs such as USO own futures on the oil market. And the future on oil right now is trading at a contango. What does that mean? It means, like, for example, if you look at the oil price in August, okay, so if you were to commit today to buy oil in August, you wouldn't be paying the current $22, you will be paying $33. Okay, so when you buy oil in the future, oil market is already predicting, if you want, that oil prices are going higher, and because of that, USO buys oil at much higher prices in the future. What does that mean? That means if oil prices go from $22 to $44, doubling, right? The USO is not going to double when the oil futures market is trading at a high contango. In fact, you might be even losing money on the USO ETF if future prices don't get to the levels that the future market is pricing. So with the oil market trading at such heavy contango, we call this that oil is bidding for storage. What does that mean? So oil prices, you can buy oil right now at $22. In August, you can buy or sell oil for $33. So what you could do is actually buy oil right now for $22, find a cheap storage, and then sell it for $33, making a significant profit. The problem with this is, like, there is no more storage left, very little, okay? So it's very hard to find any storage out there. But maybe you have some in your garage where you can buy like all these oil barrels and then store them in the garage and end up making a lot of money. I'm of course joking, because each future contract is actually for 1,000 barrels. And of course there are safety issues. And so it's not easy, as I said, to find storage, and that's why oil market is trading at such heavy contango. So what's another way to invest in oil? Instead of buying or selling oil through the futures market or through the USO ETF, what you can do is actually like trade and invest in energy stocks. So if you look at the stock such as Chevron, the stock has had a massive rally of 55% for the past few weeks. That's a major move for a stock such as Chevron. And the question, of course, is like, okay, is it still worth investing or trading the stock to make short-term profits after such a massive rally? That depends on a few things. Number one is it depends on your investment horizon, whether you're investing over the long term, so that might be okay, or if you're trying to make a short-term profit, which is a different story. It also depends on what happens with the supply of oil. So these OPEC meetings, what are they going to lead to? Are we going to cut more than 10 million barrels or no? So there's a lot of things that needs to happen on the supply side to push oil prices and push energy stocks even further. And then finally, it depends on what happens with the coronavirus crisis. We are, in my opinion, we are in a recession. And so the question now is like, how long is it going to take to come out of the recession? And that's a complicated question because it will depend on, are we able to find health solutions? How long are people comfortable to start going back to work? So it's not an easy question. And that's why, again, it all depends on your investment horizon. Bottom line, there is a reason oil prices are trading at $22 a barrel. That's due to the mess we are dealing with on the demand side due to the coronavirus crisis, and it also due to the drama we are dealing with on the supply side between primarily Saudi Arabia, Russia, and the United States. We finally looked at how you can potentially invest both in the oil market and in energy stocks. I hope today's session was very helpful and informative. If so, please share, like, and subscribe. Thank you so much for your support, and I will see you next time.